Hey, good afternoon. Happy Friday, everybody. This is your market update for February 24th, and we'll go ahead and jump right in. So the PCE, the Personal Consumer Expenditures Report that came out this morning at 8:30 was widely anticipated, and the market was hoping that the inflation figures in the report would show that inflation numbers were in fact cooling as much or more so than what the market had anticipated, which would give, of course, the Federal Reserve some, justifiable reason moving forward to continue their slightly less aggressive stance on monetary tightening, Fed funds rate hikes, things of that nature. Unfortunately, that is not what happened. The inflation numbers in the PCE report came in higher than what the market anticipated, which, of course, taking into account the recent CPI, PPI, and employment numbers that came out, are likely going to give the Federal Reserve some ammunition moving forward to continue a slightly more aggressive stance on fighting inflation and increasing Fed funds rate hikes, as it appears they still have some work to do to bring inflation numbers back down into their target range. So I think at this point, whereas the market was anticipating that the next Federal Reserve rate hike at the next meeting, which would be 25 basis points, I think at this point in time, based upon the information that we've received over the last 2 to 3 weeks, pretty much bank on a 50 basis points rate hike. Hopefully not any more than that. I don't think that they'll return back to a 75 basis points rate hike, but we'll wait and see. There's still definitely more information to come out, over the course of the next couple of weeks before the next Fed meeting. So we'll wait and see what happens. With that being said, as you can imagine, markets did not react favorably. Stock market opened down across the board. The Dow initially opened down about 360 points. S&P 500 and NASDAQ both down on the day as well. Currently, the Dow is down about 422 points. NASDAQ down 241. S&P down 58. Mortgage-backed securities, after having a decent day yesterday, started off the day this morning down 17 basis points. And last I looked a moment ago, it was down about 58 basis points. So losing, some of what we've gained over the last day or two. Unfortunately, of course, that impacts mortgage rate pricing. Mortgage rates have gotten worse over the course of the last several days, really the last 2 to 3 weeks. But that continued increase in mortgage rates has, continued to occur over the last several days. The Freddie Mac published rates came out yesterday and, of course, supported, what I'm mentioning this morning. That rates have continued to go up. The 30-year increased about 0.18%, currently sitting nationally at about 6.5% right now. The 15-year increased about 0.25%, sitting nationally at about 5.76%. And that's before taking into account any market deterioration today. So I would anticipate that rates are a little bit higher today than what they were yesterday. We do hope that some inflation numbers that are coming out in the second week of March will reflect, I mentioned that some of the inflation numbers take into account shelter costs, and that's a lagging indicator. So we're hoping that the inflation numbers that come out the second week in March will kind of reverse course a bit and support that inflation numbers are actually cooling more than the information that we've seen as of late. But we'll continue to keep you updated. I hope that you all have a great weekend, and I will see you on Monday.